What's going on, everybody? It's Stas here. Welcome back to another video. So in today's video, we're going to be doing another overall market update, looking at the S&P 500, the Dow Jones, and the NASDAQ. And overall today, guys, the markets were absolutely terrible. Bloody day today. Huge red day in the overall stock market. And we're going to also be talking about two trades that I ended up taking today in TVIX. But before we do get into the topics of today's video, for those of you new viewers out there, my name is Stas, and I make videos dealing with swing trading, day trading, long-term investing, and my personal philosophies and strategies when it comes down to investing and trading in the stock market. So for those of you guys that want to learn more about that, feel free to drop a like, leave a comment, and subscribe, and follow me on Instagram as well as on Twitter, and join our Discord group chat as well as our Facebook group. All of those are linked down below in the description box. So let's start off talking about what happened in the S&P 500 today off of a technical perspective. So let's draw out some resistance points right here in the S&P 500. And, you know, we got rejected here at 28.15. We talked about this in many other videos. You know, we struggled to get past this resistance here, and obviously we did not get past the 180 SMA resistance. And pretty much now, guys, we are testing these lows of about $2,650 for the S&P 500. This is not looking too good at all from a technical perspective, guys. And, you know, all the stocks, pretty much all of the stocks that we've been watching and that are in my watch lists were red today and have been getting crushed over the past couple of days. And we're going to go into it a little bit in depth on what Morgan Stanley said about the overall stock market. I have an article here on Safari. We're going to pull that up and take a look at it. But before we do, let's just do some more technical analysis on the S&P, the Dow Jones, and the NASDAQ. So right now, guys, we're pretty much trading in a horizontal pattern for the S&P 500. So keep an eye tomorrow. If we do break even, lower than here, make a new low, that is going to be a very bad sign for the S&P 500, and that's going to put us even deeper into this correction, maybe even heading into, deeper into a bear market possibly, right? Because, a bear market, is when a stock or an overall index goes below 10, 15%, 20% from recent highs. So if we look at the recent high here from the S&P 500 at about 29.40, that's an all-time high. From there down to where we are right now, let's see how much we've fallen. So we've fallen about 11% from the high, from the peak that we saw earlier in September. So we're getting closer to bearish, a bear market territory, and we're slowly getting out of a correction right now in the overall S&P 500. Not looking too hot right now, guys. Not looking too hot at all. But, as all these stocks are falling, this is not really good for trading, although, you can't really swing trade stocks right now, but there are a bunch of different ways you can make money. The inverse ETFs, the market ETFs, you can play options, right? There's a bunch of different ways to make money when the overall stock market is falling. But, we're just taking a look at this overall. We're going to look at some stocks, and we're going to just see and try and understand where the overall market is going. So just like the S&P 500, guys, the Dow Jones is now testing the support level at about $24,500. And let's see how much this has fallen from the peak we saw in September, about 10%. So, the Dow Jones down 10% from the peak, S&P 500 down about 10-11%. So they're still in the correction zone, but if we do fall a little bit more, let's say 3 to 5 more percent, we're going to be slowly heading into that bear market. So, guys, it's not looking too hot, like I said, in terms of the technical analysis of these major indexes. So, tomorrow, keep an eye on the Dow Jones. Maybe we can have a rebound day, but if we don't and we break below here, again, that's not going to be a very, very good sign whatsoever. So, NASDAQ today, guys, it blew below that support we were talking about in yesterday's video at about $6,600.85, 66.85-ish. That was the support, right? We blew below that, down 2%, down $150. And, Apple, guys, got crushed. So we're going to talk about Apple and some tech stocks right now. But before we do that, let's take a look at this article from Morgan Stanley that I just pulled up from yahoofinance.com. And this is by Investopedia, by this fellow right here. And the worst is yet to come for stocks, Morgan Stanley. And it goes to talk about here, it goes into pretty much what we just talked about. The S&P is only down about 9%, but from what our calculations were, it's more, down to about 10 to 10.5% from the peaks in September. Hardly a devastating decline. So what that means, it's not too bad. It's still, considered a correction, but there is some more downside according to these Morgan Stanley analysts. But that statistic conceals the fact that we are already in a deep bear market and more downside is still to come, according to Morgan Stanley's latest weekly warm-up report. Not only does the price action this year suggest we're in the midst of a bear market, more than 40% of the stocks in the S&P 500 are down at least 20%, but it also trades like a bear market, wrote the bank's analysts. Even companies with good news to report have seen their stocks sell off. We've seen this a bunch over the past couple of weeks throughout earnings season, a good indicator that the market is in a bear territory. So this is very scary, guys. Coming from Morgan Stanley, a bunch of stocks have been reporting good earnings, right? They've been reporting good earnings, but we see the stocks selling off. That means that these earnings are not really convincing people to put money into those particular stocks. Selling off, taking profits, not good. This could potentially be a bear territory, according to these analysts, right? So overall, Morgan Stanley, the technical damage is irrefutable. We just saw how bad that technical damage is. Why stocks may fall further. Earnings estimates may come down sharply. Growth stocks face biggest downwards revisions. Major averages of the S&P 500, NASDAQ, and Russell 2000 broke the 200-day moving averages. Individual stocks and indexes still face risk. And another thing I want to talk about very, very quickly before we do get back into what trades I personally made today. As stocks have declined, their valuations have also come down from previous lofty levels. Forward 12-month price to earnings ratio, very important, ratio to to value a company. For the S&P 500, fell as much as 18% from their peak last December to their low at the end of October, which represents about a 90% of the valuation damage from the current bear market. So pretty much, guys, what this means is that stocks have pretty much lost a good amount of their value in the past couple of months. So that means there's a lot of good opportunities out there in the overall stock market. There is value in particular stocks, but you have to go in deep and find those stocks. And for me, I already know what stocks are undervalued in my personal opinion, and I've been buying some shares recently for my long-term portfolio. So if you guys want to check this article out, check it out on Yahoo Finance. I'm sure if you just type this in here, it'll pop up and you guys can read more into it. But let's talk about, what stock I personally traded today, and that was in TVIX. I did an update on this on my Instagram story. I did an update on this in my Discord group chat. Again, all of those are linked down below in the description box. But pretty much, guys, I was able to trade this one early on in the day, and I pretty much wanted to get into this due to the markets selling off heavily pre-market hours. And we noticed that because TVIX, whenever the markets are selling off, TVIX is going up in price. So obviously, if this is going up in price pre-market hours, the overall markets are selling off. So once we notice this peak here at about $53, the sell-off, heading into the market, what did that do? That opened up a nice 5% margin from, the pre-market highs. And this is something I personally do, and a tactic I use is I try to find stocks and ETFs, right, that peak up pre-market hours and they head into the market on a sell-off. Because if they head into the market on a sell-off and they're able to hold a support level, during the market, early on in the market, and they start to push up in price, that gives us a validated amount of profit potential, in this case about 5% like we saw, that the ETF or stock can end up moving. So I noticed this, guys, and I personally got into TVIX, I believe at about $51.70. I took an initial position here, added more at about $52.20 as it kept going up a little bit, brought my average to about $51.95. And then I took my profits. Let me show you guys where I took my profits. I took my profits, I believe it was here on this little dip below about 53.30. Initially took my profits there. So from about $51.85, let's say, up to about 53.30. That was about a 3% trade right there. And then I actually ended up getting back in on the dip. I believe this was at about $52.90. I waited for the bounce here, waited for a little push up, ended up taking a position here, and I actually did not grab all of this profit here. This was a mistake on my part, guys. I did not sell off as it made a higher high here at $54.56. I actually caught it down here at about like $53, and I believe it was 75 cents. So I did leave a lot on the table by not selling at the top, but, you know, profit is profit, and, you know, profit is profit. That's it, guys. If you make a little bit of profit, you know, be happy with that, because a lot of people are losing money every single day trading stocks. So about 3% on the first trade from 52.90 up to about 53. What did I say? Like 70. That was another 1%. So I made about like close to 4%, a little bit less today. It was about like 3.8%. And you know, my daily goal is about 4 to 5%. So a little bit less today, but that's okay, because my UGAS trade from yesterday, which was about 8%, compensates for the rest that I was not able to hit today. So overall, everything is good, guys, for the first 2 days of trading. But, you know, the overall markets, again, like I've been saying this whole video, are looking like crap, right? Let's take a look at Apple, for example, right? This is one that I'm actually in at about 175 in my long-term portfolio. And now we're getting in an interesting position because, you know, we're getting near my average price. So I want to add way more shares into my Apple position, but I want to see if we're able to fall even further down. If we get below 170, guys, I'm going to be loading up so much on Apple. It's crazy. And remember, I was talking to you guys about Facebook. Well, Facebook hit into the 120s today, and I was able to add a couple of shares into my Facebook long-term portfolio, because I was talking about how I want to get into Facebook. Well, I've been in Facebook, right? I'm in at about 167 right now. Average cost, I've been averaging down, but I haven't in the past couple of weeks, because I was set a price target for myself at around 120s, in the 120s. So once we did hit that today, guys, I picked up some shares, bringing down my average cost in Facebook. And again, for those of you guys that have been watching my channel, I'm a firm believer of Facebook stock heading in the long term, and I really love this stock, especially at these levels. But, you know, let's just take a look at a couple tech stocks, because they got hit pretty hard today. Well, you know, Google didn't get hit that hard, about up 0.5%, but, you know, early on in the market, guys, we were selling off heavy. We saw Google go down under 1,000. You know, Amazon down to $1,400, guys. This was once a, what was it, like a $2,000 stock. This one's down, you know, what is that? Like, not, what's it down? About like 30%, I would say, from the top, 20 to 30%. 40%. That's insane, right? You know, Amazon, you know, Netflix has been getting killed. Microsoft, even Microsoft dipped below $100 today, I believe. Yup, briefly dipped below $100, but, you know, that's what the overall tech stocks are looking like, and the market just has been getting crushed, you know, pretty much just due to a lot of the big weighted companies in the stock market just bringing down everything. And in terms of some other plays from today, guys, you know, Drip ended up being a very good play today. You know, if you were able to play this one, you know, congrats to you, because it was up 15%. You know, we saw a nice little bounce, you know, potential bounce play here. I was not able to get in there, but, you know, for those of you guys that did, shout outs to you. Good trading there. You know, we saw some great opportunities in Drip and Gush today, because they had some good solid patterns, right? We sold off here. You know, we could have played this one here. You know, we could have hopped into Drip as we got rejected there, but I personally didn't do that. Let me know down below if you guys did that today. You know, the natural gas ETFs, they were pretty freaking volatile today, to be honest, guys. You know, we opened up at 163 all the way down to 132, shot back up to 170-ish. You know, DGAS was a pretty solid play today. If you guys were able to ride this DGAS wave, shout out to you. And check out the DGAS video. I went in depth on the reverse split that DGAS is currently in. So check that video out. It was earlier in today that I uploaded it. It's the previous video from this one. I'll have a card up here if I do remember to put it in. Stas, I hope you remember, but I probably won't. So, I'll catch you guys in the next video. Check out that video if you're looking into DGAS, guys, because it's very, very important to understand what's going on with this ETF. So I'll catch you in the next video. Do your own research, guys, when you're doing anything with the stock market, trading, investing. If you want to follow me on Instagram, Twitter, join the Discord group chat, Facebook group. All those are linked down below in the description box. I'll catch you guys. Peace out. Have a great night. I'll see you tomorrow.